The Fed announces interest rate, Bitcoin volatility soars. The cryptocurrency market is influenced by macroeconomic events. The Federal Reserve of the United States announced that the interest rate remains unchanged. There will be no immediate increases or cuts. This will continue at 5.5% annually. In addition, one interest rate cut is expected in the remainder of 2024 and for next year. It is worth clarifying that most investors and financial analysts expected 2 cuts by 2024. At the time of this recording, just a few minutes after the Fed's announcement, the price of Bitcoin shows high volatility, although without yet defining a clear upward or downward trend. Apparently, many were hoping that an immediate interest rate cut would be announced, which tends to favor the stock market and cryptocurrencies, but this is not what happened. Therefore, the first movements of Bitcoin were downwards, as can be seen in the following graph. We will have to wait a few hours to be able to clearly define what the impact is on the price of Bitcoin. Anyway, in the long term, interest rates in the United States being frozen should be bullish for BTC. When this happens, investors go to the market to explore options beyond safe investments, such as treasury bonds, in search of higher returns. In this context, cryptocurrencies and the stock market tend to be favored. It is expected that, if inflation data continues to decline, the Fed will decide in a few months to make the projected decreases in the interest rate effective, further favoring BTC and the stock market. In recent months, there has been modest progress toward the committee's 2% inflation target, the policymakers said in their statement. Regarding this projection, the CEO of the investment company, Franklin Templeton, commented hours ago before the FOMC meeting, the Fed's department that determines interest rates. It will be a pretty boring meeting. I think it will be interesting to see the economic projections that come out and how they change, if at all, from the March projections, but really, as we get closer to 2025, we are still convinced that the Fed will continue to see disinflation towards its objective and that this will allow this normalization to be more towards the neutral type. Ed Perks, CEO of Franklin Templeton. Bitcoin liquidates positions of leveraged traders. The sharp movement of Bitcoin caused liquidations in futures traders who operate with leverage. The following graph, provided by CoinGlass, shows how, just at the moment the Fed's announcement was made known and the price of Bitcoin fell, more than $90,000 were liquidated in just 1 minute. It is worth clarifying that these liquidations involve not only Bitcoin traders but also other cryptocurrencies. This is because altcoins, in general, tend to follow the price movement of BTC, whether up or down.